Welcome back to Silver and Metal IQ. I'm Peter, and today we're diving into a video that should make every gold and silver investor stop and pay close attention. It's in writing that I think this will end up as a failure to deliver, and I think that will happen first in silver. Gold will probably come after it in 24 hours. You said squeeze, right? Squeezes that looks at price. Have things been tight? Sure, of course. The price keeps going up. But there is a risk that there are more shipping requests than ounces in stock to meet them. Along with that inability to deliver, conks will send out a force majeure. People will get paid in cash. However, it is a default, so they can say, no, we didn't default. Michael Harton is the top investment officer for Bank of America. If you want to sell, you should have 25% stocks, 25% bonds, 25% short-term treasuries, and 25% precious metals. Is that right? How much does Bank of America say 20? At this point, they say silver could reach 309. The silver rally is quickly changing from a normal bull move to a structural problem because the physical supply is getting tighter. Prices are going up right now, not just because people are guessing, but also because the supply system is under more and more stress. Bill Halter and Andy Schectman said that silver is likely to have a failure to deliver because there is more demand for physical ounces than exchanges can truly supply. In that case, paper contracts could be paid in cash under force majeure, a legal term that avoids the word default but confirms it in real life. Silver is likely to break first, and gold could follow within hours. Even views in the establishment are changing. The chief investment officer of Bank of America has said that a lot of money should be put into precious metals and has predicted that prices will go up, such as silver hitting $39 an ounce. That kind of prediction shows how worried people are about stock shortages, broken price discovery, and falling trust in the paper markets. Here are some clips from their chat. Before we go any further, please subscribe to our channel and click the bell button to get updates when they happen. Thanks, and have fun with the movie. Price is a worry for everyone. Don't worry about cost. In the end, do you own it or not? How many ounces do you have? From now on, you will measure your net worth in ounces instead of dollars, yen, or euros. You are going to use ounces to figure out how much money you have. So it doesn't matter what the price is, because silver is going to break down. Because of this, you either own silver and have it, or you don't. Either you're in or you're out. You can't get back in once you're out. You'll never be able to get in. There won't be any real metal that you can pay for with cash. Money given by fiat will not be taken for real metal. Don't worry about the price. Take money out of the system and put it into metal. Metal will never fail. The system is going bankrupt. Please remember what happened in April 2023 when those 3 banks in California shut down on a Thursday or Friday. I was on a short trip. It turned out not to be a trip after all because the phone started going off. There was a mad rush to buy metal, and by Monday morning, no sellers had any left in stock. I mean, we were taking orders and promising to deliver in 6 weeks. It's possible for this to happen very quickly, and I've already said that it will end up as a failure to give or to deliver. I think that will start to happen first in silver. Gold will probably come after it in 24 hours. You said squeeze, right? Squeeze is that looks at price. Have we been in a tight spot? Sure, of course. The price keeps going up. But there is a risk that there are more shipping requests than ounces in stock to meet them. And if they don't give conks, force majeure will be used. People will get paid in cash. They can then say, no, we didn't fail. But don't get it wrong. It's a default. You should be able to stand for delivery, get the metal if you bought a silver contract. If you don't get the metal, that's a default. They can legally say it's not a default from a technical point of view, but in the real world, not only do you have the arbitrage in China, where they post a constant $56 spread between New York and China, which encourages traders, especially big traders, to buy paper in New York and sell physical in China to take advantage of that arbitrage. We're playing right into their hands, and then silver won't come back. So there are a lot of things going on at once that cause a world rush. At the end of 23, the European Union says silver is a very important element. It was in November of last year that China sent out a letter saying, yes, we're going to make it easier for our own people to own silver. Then they said, silver is a strategic metal. Then they say, well, we're going to limit exports. Well, this isn't about two brothers like the Hunts trying to corner a market, and it's actually the same problem. It looked like there were more paper contracts than bars behind it, which the Hunt boys saw. Let's get the paper stand in the mail. Also, the trade does what it always does. They change the rules, something like what they're doing here, and go after the longs right away. Okay, that's no longer the point of this. Some of the world's richest and smartest people are in a hurry to get their hands on a metal that is finally being seen as strategic and not just commercial, and which could be worth more than the dollars used to buy it. And something that started out very slowly is now becoming more noticeable. The funny thing is, Ivan, where the hell is the mass media with all this talk about silver blowing everything away? Where are the honest people in the mainstream? Not only have we talked about what silver has done, but every month billions and billions of dollars come into COMEX. Where the hell are ignorant people like Jim Cramer or anyone else on CNBC or Fox saying that something is wrong with COMEX? The person making billions of dollars doing this is not a small trader. These are the smartest people in the world, right? They wouldn't do this just because they can, right? That's all you need to know. I'd like to use some stronger language, but I won't because I just want to make my point clear. Before that, all you need to know is why 8 Western banks had the biggest concentrated short position in any commodity ever traded on COMEX. There are over 1,000 commodities on the exchange. Why silver? Why? And that might have something to do with the military-industrial complex, but that's a different subject for another time. But when you see the world's biggest traders doing these things and no one else is paying attention, you should pay close attention to what they're doing because it's front-running, and you either trust it or don't. I believe that is exactly what is going on now. The amount of money coming into the books in the form of physical metal tells me that this bull market hasn't ended yet. At this point in the silver bull market, it's not about price charts or short-term changes. It's about who can own silver and how much is available. Now, what matters is how many ounces buyers really have. More and more money is moving from fiat currencies to physical metal. This is putting more pressure on delivery systems because paper claims far exceed real inventory. This makes it more likely that force majeure settlements will be paid in cash instead of metal. When that line is passed, there is no longer any price discovery, and physical silver is no longer available on open markets. Recent events show how quickly this can happen, with banking shocks causing shortages overnight and supply delays that last for months. At the same time, signs from around the world are that supply is getting tighter. Silver is becoming more and more recognized as a vital and critical metal, and export restrictions and rising domestic hoarding are making this happen. This isn't just noise from speculation. The rush of institutional capital into real channels shows that a structural shift is still happening. We need to go back to the interview. The huge amounts of gold and silver that are bought by state banks. India is a big consumer of silver, but Saudi Arabia is also very interested in it. China, which is the world's second largest silver producer, flies all over the world, especially to Peru and Mexico, to buy silver that has already been processed in doré concentrate. They pay twice as much as the West would to ship it back to China to be refined. The central banks bought a lot of gold and silver and then took it off the exchanges, removing counterparty risks and standing for delivery. They even took their metal back from the New York Fed, which always had access to the COMEX, and from the Bank of England, which had access to the LBMA. This was all part of a larger trend by the best funded and most informed traders to accumulate and repatriate their wealth in the world. That's one step further. Someone told President Trump, dude, if we don't bring this back, if we don't get in this game, we're in big trouble. And we've seen that for 14 to 15 months now. We've seen huge packages. For the month of December, 64.73 million ounces of silver were distributed and stopped, which means they were delivered. Not the same as left the facility. A lot of it did leave the building, but that just means that a lot of people are interested. which is bringing in the real metal instead of the paper promises to keep going. That was the biggest supply of metal in 1 month into conchs. It was silver. Then we look at this. In the first 3 days of the January contract, the first 2, the 3rd, and the 4th, we saw what number? I don't remember exactly, but I think it was around 875,000 ounces. We see the words, "Where the hell did that go, Ivan?" in the first few days of the January deal. About 18 million ounces of silver stood there in just the first 3 days. During the first 3 days. So, the biggest money in the world and around 600,000 ounces of gold in the first 3 days. There are billions of dollars worth of gold and silver ready to be delivered in 3 days. This has happened every month since November of last year. These people are ahead of the game because they know what's going to happen. They're waiting for delivery in huge numbers when there used to be more warrant trading and less metal moving. Oh, there's a lot moving now. And that makes me think that the smartest traders in the world see something that the rest of us don't. The rates go down, but they stay at 55.56.1. I said that people should be at least 70-30 in favor of silver, with the plan to trade it for gold in the future. Well, I've been telling people for about 5 years now that I don't mind if they want to be 100% silver. But in the end, you want more gold than silver. Ideally, you want gold to silver to be worth at least 60% more than silver during normal times. But we haven't had normal times or a normal gold to silver ratio in probably 30 years. That's why silver has been the goal. I think the failure to deliver will happen in silver. And in the end, if it doesn't work, you're either in or you're out. You won't be able to move or change positions. You can't get gold. You can't get silver. You can't get in if you don't have it. The real economy is completely turned upside down and, well, I don't want to say stopped, but it's really slowed down. People will want platinum less and less. Platinum is not platinum, and neither is palladium a valuable metal. They're not money, though. Money is made of gold and silver. You want gold and silver because they are safe forms of money that can't be lost. It's also not possible to keep up with the system, so we will have to go through an insolvency default. The system is in the process of going back to its first settings. That's why you want your money to be in something that can't fail instead of that system. It should be money too. Silver and gold. Gold and silver have a price. Check out the cash market. Check out the market in Shanghai. If you compare it to New York or London, look at how the money changes hands. There is a split between the paper market and the cash market between those 2 points of trade. In answer to your question, gold will come right after silver if it doesn't work. Now we're going to talk about derivatives. That's more than a $2 quadrillion market. When all of the world's assets are worth what? $300 trillion to $400 trillion? That means there are a lot more bets than worth. Everything is going to fall apart because of that. It will break down trust. It will, which makes people lose faith. Trust is the key to everything. Also, guess what? The cash in your wallet and bank account is trust money. It's been a scam. I only know that we have a structural imbalance. There seems to be a chance that the paper markets will not deliver. In that case, the game is over. Anyone who tells you time and/or price is lying because they don't know. Just know that all the influence will break when this thing melts down and the whole system melts down. I mean, that debt keeps the stock market, the bond market, and the real estate market going. But guess what? The price of gold and silver were pushed down with the same kind of pressure. For these institutions to get rid of their gold and silver stocks, they need to buy. The size, speed, and purpose of this point in the rare metals cycle are what make it unique. No longer do central banks and state buyers trade paper claims. They want gold and silver to be returned to their rightful owners, and for counterparty risk to be taken out of the system. Record sales on COMEX, like tens of millions of ounces of silver in just a few months, show that the smartest capital is on the verge of a structural breakdown in paper markets. It's becoming clearer that this is about real metal, not debt, as the difference between cash prices in Asia and paper prices in New York and London grows. With an odd gold to silver ratio, silver is still the main focus. When delivery stress turns into complete failure, there is no more entry and positions can't be changed. In that setting, who owns something is more important than price, and getting ready is more important than time. Leave a comment below with what you think about their opinion. If you learned something from this video, please support us and turn on alerts to find out about our new videos. See you in the next movie. Thanks for seeing. Welcome back to Silver and Metal IQ. I'm Peter, and today we're diving into a video that should make every gold and silver investor stop and pay close attention.